Hey, it's Mark Ferguson with Invest for More, and today I want to talk about inflation and a huge misconception a lot of people have about the recent inflation numbers that came out. I'm going to talk about United States inflation, some other countries as well, and we'll talk a little bit about interest rates too. Now, my channel is mostly about real estate. I've had some really crazy stuff going on lately with squatters, evictions, people breaking into my office, a hoarder house. But interest rates and inflation greatly affects real estate as well with interest rates. So I want to talk about some things that a lot of people misconstrue about the inflation rate and how it might not be nearly as bad as many people think it is. So I'll talk about that. I'll show you some numbers, show you some figures, and of course, we'll continue to have other crazy videos on our properties for different things going on. All right. Love the likes, love the comments, love the shares. Keep those coming. And the first thing I want to talk about is the United States inflation in the last year or so. And so what we're looking at right here is tradingeconomics.com, which has some really cool inflation information. And this chart right here, I think, is one of the most important charts to look at when considering inflation, and something a lot of people just completely ignore and don't understand. And what this is the month-over-month inflation in the United States for the last year. And so what you can see here is basically, right, how much did inflation go up per the government's, this is the U.S. Bureau of Labor statistics, so per their numbers. Now, of course, a lot of people chime in and say food is higher, other things are higher, and that is very true. And I might talk about that a little bit here too, because I actually own a small grocery store and can give some insight into that. But for the purposes of this, we're using these numbers. We want to compare the past to what's happening now, and because it sure looks like the government is using these numbers as well to guide their interest rates. So I think it's important to use these numbers, even if they aren't 100% accurate or telling the full story. So what you see here is month-over-month inflation, which means how much did prices go up November versus December of the same year, or January versus February of the same year. And here we can see in the last month, inflation went up 0.1%. And so we're going to do some simple math. I know you should be compounding these things and doing not quite what I'm doing to get the exact numbers, but just for simplicity's sake, I'm going to do it this way. So if you have 0.1% inflation every month for a year, multiply that by 12 again, it would be a little higher than this, 1.2% inflation. And the government has come out and said they want about 2% inflation. So the last month, we had lower inflation than what the government thinks we should have. That's probably a good thing. However, the government keeps coming out and saying inflation is too high, they don't like the numbers, and it needs to be much lower. So why do they say that? Well, because the number that most people hear is 7.1% inflation, which is the year-over-year number. And the year-over-year number is comparing November of last year to November of this year. And you're comparing it all the way back to last year. Prices are 7% higher this year than the same period last year. That's year-over-year. And so the government says, well, that needs to be much lower. We have to get inflation down lower. Well, the problem with that is all that inflation, not all of it, but most of that inflation, the 7.1%, occurred in December, January, February, March, June. Almost all of it occurred June and prior of 2022. July had 0, August had 0.1, then we jumped up a little bit to 0.4, 0.4, 0.1 again. Inflation has been from 2 to 3% the last 6 months. It has been what the government says it wants it to be, yet the government is still raising rates saying it's not low enough. And I don't know why they're doing that, but you can see right here in the charts, the last 6 months inflation has pretty much been right where they want it to be. And this is what inflation has looked like the previous 10 years. So we can go back, this is a 10-year chart for inflation rates, and you can see it goes up and down quite a bit. It's not just a steady 0.1 or steady 0.2. And these are the last 6 months or so right here. You can see pretty low, up, down again. This little section right here looks almost exactly the same as the previous 10 years. There may be a few more, some drops here and there that we haven't had. But you can see the real inflation all occurred before that. In 2021, we had pretty high inflation. The start of 22, we had pretty high inflation. Now we just aren't seeing it. So that's why I think it's really important for people to understand when they say 7.1% inflation, it's not, prices aren't still going up 7.1% right now. They're going up 2 or 3% right now, but at the start of the year, they're going up like 9 or 10%, and then you kind of the whole year averages out to the 7.1%. So the government keeps saying inflation is too high, that we need to lower it, we need to keep raising rates, but it's not, right? The last 6 months, it has not been that high according to their figures and their numbers. It has actually been right in line with where they want it to be. It's been right in line where it's been before 2021. Almost all the inflation occurred here at the start of the year. So it gets real confusing to me on why they keep raising rates, why they keep saying they need things to bump up. And I wonder if there's other motives. So we can look at a few quotes from the Fed government and see some crazy things that they've been saying. Here's an article from Reuters, and I try to make these as recent as possible. This was about a week ago, 9 days ago, December 14th. Powell says he will not change the 2% inflation goal. This is Powell, who kind of heads up the Fed Reserve and decides on interest rates. Apparently, I mean, it seems like he just makes these decisions himself, but hopefully he's concerned about other things. And speaking at an open market press conference, he asked whether the Fed might consider moving its 2% inflation target up to a higher level. And he said, we're not considering that. We're not going to consider that under any circumstances. We're going to keep our inflation target at 2%. We're going to use our tools to get inflation back to 2%, he said. There may be a longer run project that could take a fresh look at central banks' inflation goal. But for right now, he said he's not changing anything until we get back to 2%. It says that was adopted in 2012. And the thing about that is, if we look at these charts again, the only way to get back to 2% inflation year over year, which is what he's talking about, is to wait another 6 months, and we assume that inflation stays the way it is now. So we just wait 6 months because we have to wait for this previous data to kind of fall off the chart and get new data. Or we have to have massively negative inflation, prices dropping considerably, like 1% a month, 2% a month, as high as it went up. And people say you have to get inflation under control, prices have to drop. That's not really true. You just want things to steady out. Even when interest rates were crazy in the, I don't think we can see it on here. Maybe we can. Oh, we can a little bit. I wish I could. I have another chart. But even, this kind of shows us here. Even in the 70s and 80s when inflation was crazy, way higher than it is now. Here's this one spot where it was, high. Here you can see the 70s, inflation just spiking very high for almost the entire decade, really. In the 70s, the interest rates were way higher. They worked for years and years and years and years and years to get inflation down. If you look at this, there was one tiny period where inflation was negative. All the rest of that time, it was going up. It never just dropped like it seems the Fed wants it to do. It just leveled out. And so it just seems crazy to me that his goal is to get 2% inflation, no matter what, and that's year-over-year inflation, not, for the last 6 months, which we're real close to right now if we actually took the last 6 months data and took, 6 months annualized, and he is not budging on that. So it's very weird to me that that's the goal and they're not changing it at all when inflation takes into consideration data so long ago, when right now it's doing okay. And high interest rates are definitely hurting the economy right now, hurting housing, hurting all kinds of different things. And in my opinion, I've talked about this before, I have a video on it, higher rates make costs higher. Higher rates can increase costs. The goal of raising rates, and people will admit it, is to destroy demand, right? Inflation goes up a lot of times because there's too much demand, too little supply, right? It's kind of out of whack, prices go up, or the costs of things go up, or wages go up, which the Fed has admitted has caused inflation too, is higher wages. Well, the theory behind raising rates to lower inflation is that it will destroy demand. So if your demand is here and supply is here, then your demand will drop, and then you're hoping that prices will drop or at least not keep going up. So the point of higher rates isn't to lower costs. It's not to make things cheaper. It's just to stop people from buying them and hoping that companies suffer and have to lower their prices in order to get people to buy it. So the whole goal of raising rates is literally to destroy the economy and try and hurt people who are living in this country. So it seems crazy to me that they're not being flexible in considering these other factors, that 2% is their goal, and that is it. Here's another one of those quotes from Powell that talks about Fed's Powell cites top barrier to taming inflation, workers' wages. So what is he saying? He is saying the biggest remaining barrier to taming inflation is the shortage of workers, which is giving Americans greater clout to seek higher pay. Powell also again signaled the Fed will begin raising interest rates in smaller increments, but understood that significantly higher borrowing costs still lie ahead. So he might start raising the interest rate smaller, but it's still going to keep raising it, even though he says his biggest obstacle to taming inflation is not enough workers. How does raising rates create more workers? It doesn't, right? It actually, what he's saying is instead of trying to get people to work more and maybe incentivize them to, not be unemployed or underemployed or just decide to stop trying, we're going to try and hurt businesses so they have less jobs. So that's our goal, is to hurt businesses, not to actually maybe incentivize people to go to work and solve the problem that way. Okay, and here's where he says he wants to reset the housing market. In June, Federal Reserve Chair Powell announced plans to, quote, reset the housing market, then elaborated further. When I say reset, I'm not looking at a particular specific set of data. What I'm really saying is that we've had a time of red-hot housing market all over the country, where famously houses were selling to the first buyer at 10% above the ask even before seeing the house, that kind of thing. So there was a big imbalance between supply and demand. Houses were going up in an unsustainably fast level. Sorry, it's a hard word for me. In an attempt to fix this, the Fed has been aggressively reducing interest rates. So if that's the case, Powell's goal was to stop the crazy overbidding, crazy bidding without seeing houses. That stopped. That has calmed down. So it would seem that that part is fixed. It would seem the inflation part is mostly fixed. I guess, are they still just trying to get wages down? Is that the goal? Trying to decrease employees or job openings? Is that their goal? It's hard to say. And people talk about grocery stores and food going up, and that is very true. It is going up, and I own a small grocery like I talked about. But raising rates is not going to lower food prices, right? A lot of people come to me and say, yeah, but look at food prices. I'm like, will raising rates lower food prices? Like, no. People have to eat. They're going to keep eating. It's not like that demand is going to go down. And in fact, raising rates actually probably makes it harder for food prices to stabilize and not keep going up. Because if you raise rates, it increases the cost of loans, of small business loans, of suppliers, of farmers who need money to buy equipment and buy seeds, or pay workers who needs loans. All those costs go up. That means their food has to go out the door more expensive for them to make money, say, in business. These food companies who make food, if there's too much demand and they need to increase capacity, increase supply, hire more people to produce food quickly, well, if the cost of money goes up, that makes it much harder for them to increase supply, to hire more people, to expand, to meet that higher demand. And the Fed is saying, well, we're going to destroy that demand. We don't want to increase supply, we want to destroy demand. But if you kept rates lower, then it would be easier for businesses and companies to expand, to help solve these supply chain issues, to bring more work and business to the United States instead of relying on China. You have cheaper money to build and expand and hire people, then you can increase supply instead of having to destroy demand. And I see that with my small grocer. Our prices haven't gone up a ton in the last year. They have for some things. I own a liquor store as well, and I think those prices have gone up higher than some of our food. But what we see is, like, I'm a very small grocer. I can't get these massive bulk discounts at King Soopers or Kroger's or Safeway or whatever grocery store you have in your part of the country. They buy on massive bulk deals with these companies, so they get stuff much cheaper than me. I pay way higher because I can't get those bulk discounts. We have to charge more for our food. But what we're seeing now is my costs haven't gone up that much, but the big grocery stores have gone up much higher. And it's actually, they're not the same as my prices, but closer. And is that because they can't get those bulk deals anymore? Because supply is so low, those companies don't have to give any bulk deals. They know people are going to buy it. They know they have to buy it. So they can charge more because there's not enough supply. If we let people increase supply, increase business, expand, then maybe those bulk deals come back. They can rely on those contracts and that pricing, and food pricing can come, maybe not back down, but at least steady out. Maybe it might come down in some cases. So there's a lot to consider here with rates and prices and inflation. And I want to talk about a few other things here. A lot of people say, well, obviously raising rates worked because, look, inflation dropped down when they raised rates. Maybe that's why. Maybe it's causation. Maybe it's correlation. Maybe it's just random. We don't know for sure. But what we can look at, which is very interesting, is Turkey. I've brought up Turkey before. A lot of people don't like it. But Turkey did not raise rates. They've had really high inflation for years, one of the highest inflationary countries in the world. And what they did is when their inflation started getting higher, they lowered rates. They did the opposite. They lowered their rates. They said, we're not going to give in to the pressure of every other country who says raising rates is the only way to fight inflation. We're doing the opposite. We want to save our economy. We want to help our economy. We want to help our small businesses. We're lowering rates. And people went crazy saying they're going to just destroy their country. Their inflation's going to go insane. And what happened? Their inflation went down. You can see the month over month here. Crazy inflation. 13% there if you can't read that. 11.1. And then they raised rates and inflation did not go crazy. It went down. Now, these are still extremely high. Way, 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 way higher than the US. But you have to realize Turkey had massively high inflation before that. And if they lowered rates and their inflation went down, is it really rates going up or down that caused inflation to go down? Were they able to cause inflation to go down because businesses expanded, they went back to normal, they were able to borrow money, they hired people? Could it be that rates don't have that massive of an impact on inflation? Now, some people might say, well, that's just a couple examples. Well, one more example I want to give you is our wonderful country, Argentina, which has had the highest inflation in the world for many, many years. The interest rates in Argentina right now are 75%, I believe. 75%. They keep saying their goal is to make their interest rates higher than inflation. Their current inflation, does it tell us? 92% right now. They have 92% inflation right now. And they are just continuing to raise rates all year long. They just keep raising rates. And their inflation has been going up while they raise rates. You can see just massive amounts of inflation down this last month, but the last 6 months has been higher than the previous 6 months for inflation in Argentina. They keep raising rates to insane levels. It did not stop inflation. The United States raised rates. Did it stop inflation, or was it just things going back to normal, pricing coming back to normal as we catch up to the COVID closures and different things we had? Turkey. They didn't raise rates, they lowered rates, they saw lower inflation too. So the idea that rates always cause inflation to go down, I don't know if that's true. A lot of people use correlations to prove that, but there's so many different factors in the economy, it's hard to say that that's the case. Just like with housing, we've talked about housing before. The Fed has literally come out and said they want housing prices to reset, they want prices to drop, and that's one reason why they raised rates. I don't know if they've considered this, but mortgage rates doubled in the 70s. Housing prices tripled. They went from like $23,000 to over $60,000 in the 70s. There was no drop in housing prices with higher rates. The early 80s saw no drop in housing prices with interest rates going up to 18% for a short period of time, staying above 10% almost that whole decade. There was no drop in housing prices except for maybe like a 6-month window, and then they came back up again. Interest rates, there's even multiple studies about this. Interest rates do not cause housing prices to go down. Mortgage rates going up do not cause housing prices to go down. Historically, these studies have shown that. There might be a small dip in the very beginning, kind of a shock as people figure out what to do, But in the long run, prices keep going up because it's not just demand. People say, well, high mortgage rates will destroy demand. People won't buy houses. That's true. But they forget the supply side. On the supply side, we're seeing it now. There's articles all over. A record number of people are deciding not to sell houses. They're not going to sell their house with a 2% rate to go get a 6% rate. They're just not going to do it. So supply side inventory is dropping significantly. New builds are dropping significantly. So sure, demand dropped, but so did supply. So if they're dropping together, prices are still probably going to go up or at least steady out. There's not going to be this massive drop if there's still not enough houses, not enough supply for people to buy. So that's kind of my take on inflation right now. Honestly, if we look at the numbers, inflation is pretty much in control. If you look at the last 6 months, although the Fed doesn't seem to think that. I don't know why they're pushing it so hard. We've seen other people, I wish I could find these quotes, I can't find them right now, who said wages went up too high and that caused inflation from the federal government, not just random people, and that they need to stop that and they need to stop wages from going up. And that's one reason for interest rates. Like, all right, everyone says they want wages to go up, and then now you're saying you don't want wages to go up because it causes inflation. So there's some tricky stuff there. There's people saying the economy is doing too good, like literally from the federal government saying the economy is doing too good, demand is too high, we need to stop that. And it's like, why are we trying to destroy demand when we could make money cheaper? We could give incentives to just increase supply and then give people what they want. Like, doesn't it make more sense to try and supply people with what they want than to make it so they can't afford what they want? That's just me. All right, that's all I've got for this video. Love to hear your comments, takes, ideas on what I talked about. I know it can be a kind of a controversial topic, and it can get politicized as well. Although in this case, there are people from both sides giving both arguments to this, and it's not just me saying that the inflation might be under control now. There's lots of articles, lots of economists, lots of really smart people saying the same thing and kind of wondering why rates are still being pushed so high. All right, thanks for watching. Be back soon.